Hello everyone, and welcome to today's Energy Storage News webinar with GridBeyond, focusing on opportunities for maximising revenues from battery storage assets in Australia. I'm Andy Colthorpe, editor of Energy Storage News and Deputy Editor-in-Chief at Solar Media Publishing. In addition to publishing Energy Storage News and the world-leading solar technology site PV Tech, Solar Media also has an events division. This year in May, we hosted the first Australia edition of our Energy Storage Summit series, which has run for 10 years in the UK, 9 in the States, and we've got newer events in the series for Asia, Central and Eastern Europe, and Latin America. At the Energy Storage Summit Australia 2024, we were joined by speakers including Malcolm Turnbull and Salim Mazzouz at DCEEW, who is one of the designers of the Capacity Investment Scheme, as well as representatives from leading companies and startups across the space and many industry experts. It was really interesting seeing in real time how, in many ways, Australia's energy storage industry has so quickly caught up to development in other maturing markets and, in some cases, arguably surpassed them. One recent example of that might be the early adoption of grid-forming battery energy storage assets set to provide inertia to the grid through long-term contracts. Going back a little further, the national electricity market quickly took to the provision of frequency control ancillary services, which sort of echoed moves in the UK and US, but arguably put the NEM at the forefront of grid balancing with big batteries, especially given how the Australian energy market operator moved quickly to enable revenue opportunities across the different products. And that evolution continues too, with energy arbitrage rapidly becoming a bigger component of the merchant revenue stack in the NEM. EMO said in the most recent edition of its quarterly Energy Dynamics report that arbitrage revenues in the NEM rose more than 97% year on year from Q2 2023 to Q2 2024, hitting $25 million for the quarter just gone. Meanwhile, although FCAS remains an important revenue source for batteries, its share of the overall stack has broadly gone from more than 80% in early 2021 to around 40% in the last couple of quarters. Now, looking back at milestones and historic data is of course fascinating, but it doesn't mean all that much if you can't look ahead to what's happening today, tomorrow, or even years down the line and responds to the changing energy market landscape. And that's where today's expert speakers come in. Joining me are Stace Tsamzidis, Regional Director for Australia at GridBeyond, and Peter Newland, Strategy Consultant at Balancia Consulting. Peter and Stace's presentations will be followed by an audience Q&A. As always, interaction with you is very important to us, so you can put your questions for the speakers in the Questions tab on the right-hand side of your screen. We'll try and tackle as many as we can during the session, but rest assured, for questions we don't have time for, GridBeyond will be more than happy to follow up and answer offline in the coming days. Finally, from me, this webinar is being recorded and will be available on demand at Energy Storage News, while a link will be sent out to all registrants and slide presentations will be sent out to via email. So with that, and without further ado, it's my great pleasure to hand you over to our first speaker for today, Peter Newland. Over to you, Peter.
I'll put up the other deck there, Andy.
Oh, there we go. Sorry about that.
Thank you very much. So my name is Peter Newland. I've been in the utility space for 35 years now. I've spent the majority of my time both in distribution and retail, with a stint also in the UK. During that time, I've had a lot to do with control systems, comms networks, smart meters, smart grids, transformation programs, as well as a lot of demand management initiatives. But certainly in the last 5 years, I've been working in a few different startups that have been implementing batteries that are connected to the distribution grid, but they're providing front of meter services. And so I was just going to talk about, where batteries are heading in the NEM, but also from a commercial customer's perspective, what's happening. Rightio. So as you can see here, AEMO produces what's called an integrated system plan. And the one that came out this year has shown what a huge jump in storage is actually required as we move forward to hit our 2030 and indeed our 2050 targets. So the ISP is an integrated roadmap that helps industry partners, policy people, etc., have a coordinated plan to move forward, which is based on certain types of scenarios about what that future might look like, but also understanding the costs to actually get there. So these two charts are actually from the ISP, and you can see on the left-hand side, the installed capacity growth moving forward is actually enormous. And so by 2030, we're talking about 36 gigawatts and 522 gigawatt hours of storage. And then by 2050, 56 gigawatts and 660 gigawatt hours of storage. What's really interesting on these two charts is actually the growth of CER, which is a new term here in Australia, which is consumer energy resources. And you can see there's two different types of those, whether they are coordinated through like a VPP plan, with a retailer or an aggregator, all the way up to being independent, being passive DER. The interesting thing with that scenario is you can see a huge proportion of that is forecast to be a coordinated CER battery program. But currently, batteries in Australia, there's about 84% of customers at the moment that are just doing it passively by themselves. So whoever is going to come up with a plan to encourage customers to participate with their battery through a coordinated program really has to provide a really good value case for customers, give them a bit of a feeling of control, and also the party providing it really has to be able to be trusted. So as Andy indicated earlier on, one of the major drivers of investments in storage in Australia is actually the volatility of price. So the chart there indicates different jurisdictions around the world, and the coloured dots are all the Australian states. So as you can see, our price, it's not too bad, our average price, but our daily spread is quite large. And the spread of price in Australia can go on any 5-minute period up to $17,500 a megawatt hour, or down to a floor of 1,000 megawatt hours. So, this volatility with, the penetration of renewables that we have that's ever increasing is likely to be in the market for quite some time. Okay. Now, this chart here captures some of the revenue streams from the major batteries, utility scale transmission connected batteries across the NEM. Now, it's predominantly, as Andy indicated earlier on, focusing on contingency FCAS services, of which is now a 1-second market that came in October last year, energy and regulation FCAS services. Now, you can see the spread of different strategies across the different batteries that have been implemented, and quite a lot of them, you can see quite a difference in the variation of the business case that was put forward to those customers and indeed how they're trading in the market. Now, that's not all the value that you'd actually see for a battery in these particular charts. So as an example, the Dalrymple battery in South Australia also provides, anti-island or local islanding support. And some of those other batteries have caps or firming services that they provide to retailers or other parties in the market. So, when you look at that and you think, oh, well, how do I invest in batteries? What do I pursue? All of that comes down to, what you think your technology can provide, which is the speed and performance, duration in the market, the location of your asset on the transmission grid, and its criticality to the NEM and the loss factors associated to it. Has there been any policy incentives or subsidies actually available to that battery? And can I actually contract something other than merchant risk to that asset? So, so this market is going to definitely change moving forward. There's a capacity market coming in 2026, and it's likely that FCAS services will decline over the next few years as more large batteries are installed on the NEM. Okay, so SunWiz is a local consultancy in Australia that captures a lot of information about batteries and how they're connected and where they're connected. And this particular chart is showing the total that were installed in 2023. The interesting part about this particular chart is, from my perspective, it is following the adoption curve of PV in Australia, where we've got the highest capita in the world. It's actually following that same trend. And I believe now that we're at this tipping point now where C&I batteries at a distribution level are actually going to start taking off. And some of the predictions that we're seeing for 24-25 is an extra 2,200 megawatts of customer-side batteries being implemented. There's actually a property developer in Brisbane, where I'm from, and that particular developer has already implemented a plan to say, I want to pursue 20 megawatts of battery investments over the next 4 years. And their first 1 megawatt of that is going to be commissioned in a few months' time. They're doing that so that they can share all the energy from all their buildings with their customers and provide a cheaper price to those customers, which indeed incentivizes customers to move to them and secure leasing arrangements for a long time. Okay, so what are the other things that are actually driving the C&I market? Now, most large businesses, they like certainty on what their costs and revenues are going to be for the next few years, so that they can start doing some real planning around workforces and their products and services they deliver to the market. Electricity bills have been varying quite a lot year to year, and that actually creates uncertainty for those businesses. At the same time, there's also been increasing demand charges from network utilities. And in the next few years, some of these utilities are also thinking of having two-sided time of use charging, for instance, charging on exports and charging on imports. So that's going to make this equation more complex for customers to understand. And most of them today don't understand their simple billing that's in place today. So that's going to be, on their mind to actually say, well, how do I take control of this myself? Also, some of these businesses are also implementing EV charging for themselves or their customers and employees, and that actually creates a higher demand, more energy need on site. So that might mean I can put on more solar on my roof, and indeed that might drive, and I've already seen this with a couple of customers, I'm going to install batteries so I can move that energy to a more valuable time of the day for me, and I can also offset the impacts of EV charging. There's also been a number of new asset owners come into the market that want to own these assets that are on these customer sites and offer them through a contract or a PPA type of arrangement back to these customers. Again, smoothing out the price for that customer over a long duration. So, and lastly is there's also been a huge increase in the number of EPC partners and technology partners that are actually rolling out technology. So a heap of them have, I can do all the installation, I can do all the commissioning. More people are becoming aware of what you need to do to comply to AEMO and network connection standards. So it's quite refreshing that there's more competition in the market. Okay, another thing that's happened in this space, again, distribution connected batteries, is community batteries that have actually been implemented as part of the ARENA program, the Australian Renewable Energy Agency. So that was put out to the markets last year, and at the end of that, they were 10 times oversubscribed. So that's amazing that you can actually have a program that's 10 times oversubscribed, and all of those batteries are between 50 and 5 megawatts connected at distribution level. Most of those batteries are there to enable the local community to share energy between themselves, or indeed share energy to people that also do not have solar. So customers put on solar into the battery in the middle of the day, and other people can buy that energy at night. The good thing about these programs, it also helps defer a significant amount of distribution assets, because most of the exports are actually occurring at peak time on distribution networks. And it also enables distribution networks to host more renewables. So when you go and develop battery projects, obviously there's the life cycle that you go through from defining the economics, design, all the way through to operate and maintain. But from my experience, the key risks are mainly around, certainly upfront about the economics, and that all comes down to your asset owner and what their risk appetite is. So for instance, if you can secure extra revenue that is, non-merchant, that may also defer some of the risks and reduce the actual returns the asset needs to make for that investor. But where do you get the information about what the forecast revenue is moving forward? So, I've been involved in businesses where, we've engaged companies to actually go and say, what does the next 5 years worth of revenue look like for a megawatt or 2 megawatts of batteries? You get a lot of variety in those responses that come back to you. And so to me, it's all about choosing someone that's got a lot of credibility in the market, as well as a good trading capture rate to give you certainty on what that revenue is going to look like. Another thing you have to consider is, if I'm actually going to pursue services that are operating really fast in the market, then I need a technology solution that can perform at that speed, and I need a control system that can operate at those levels as well. Not all of them do. I've come across numerous solutions recently where providers have actually said these comply to the full FCAS services in the market, but indeed they do not. So really be cognizant of the technology providers that you're working with. And then the evolving market services down the right-hand side. This market does not stay still. I mean, in the UK, I was talking to some people there recently, and the UK market, they've introduced 16, I think, new services in the last 2 years for storage. That's incredible. So, the key about that, though, is you've got to have an asset that's flexible, that enables you to pivot from one service to another, right? And not all of them can actually do that. So, batteries are, it's quite an exciting asset. They're more flexible than the majority of assets in the market. But you need to think about, am I ready for now or the 20-year life of this asset? The other thing is business cases that we were doing only 3 years ago were saying that I need to do a battery replacement after 10 years. Some of the newer technologies coming out now in cells actually enable you to get to 15 and nearly 20 years now as well. So it's a good time to be in the market. It's exciting for everyone that provides services in the market. But the key thing is, when you sell it to a customer, it's got to provide the right solution to them with no issues, no problems, and deliver what it says on the tin. So with that in mind, I might just hand over to Stace, who will head into the next part of this presentation, and we'll do all the questions at the end.
Thank you, Peter. And thank you to everybody on the webinar for your time this morning. As a way of introduction, my name is Stace Zanzidis. I'm the Regional Director at GridBeyond. My background is, upon graduation, I spent 7 years in the defence industries, building analog control systems and digital microprocessors for some of the programs, like the submarine program. I transitioned after that into smart lighting controls and structured cabling in C&I builds. Got my green building, my neighbours accreditation. Spent 7 years working in Malaysia, looking after the Asia region right up to the Middle East. And upon returning from Malaysia, I will take up the position as the Director of Solar at Schneider Electric. 2019, I co-founded a software as a service company providing energy services in the residential market space, and that company was actually acquired by Schneider Electric last year. And I've subsequently worked at a company developing behind-the-meter microgrids before joining GridBeyond. And again, thank you to Peter. You provided a great overview of the battery storage market in Australia and the challenges faced by developers and financiers. You made some really good valid points, like the immense need for more battery capacity on our NEM and WEM, the advantages of working as a consortium where you bring in diverse skills and expertise from people who know batteries, who know software, who know EPCs, rather than doing it all in-house, and the importance of having a solid trading and optimization platform to maximize investment returns. And that is a great and the perfect segue into my presentation. In a way of introduction to GridBeyond, those who don't know the company, formed in the UK or Ireland in 2010, we've grown to 160 team members. We operate across 4 regions: the United States, particularly the EROC Texas region, which is a similar market to Australia. We operate across Australia, other than the Northern Territory. We have work on the NIM and the WEM in Japan, and obviously in the European markets. So we're a global leader in managing assets of all types at the grid edge, and we enable those assets to participate in grid services and generate income for our customers. We operate across a variety of energy markets, including front of meter and behind the meter, in terms of battery storage, but we also work with microgrids, solar, wind, peaker plants, etc. Our software solutions are used to optimize large energy use, or flex loads as we call them, such as EV charging infrastructure, data sites, water treatment plants, manufacturing such as steel, cement and glass, where there's large flex loads, and we enable those for FCAS trading. Our expertise helps unlock energy flexibility, creating income streams for our customers, and we support their financial viability by providing these valuable services to the grid. Peter mentioned the pain points and the considerations by developers and financiers, and I'll hone in on 3 that GridBeyond has got the most interesting. We know that developers face several challenges wishing to invest in best battery storage systems. When a project developer financier contemplates developing a battery asset, there are 3 broad considerations that they need to make: financial viability, the choice of technology, and the lifetime performance of the system. In evaluating the economic viability and financial risk, costs aside, such as CapEx and OpEx, the other considerations really are the forecast revenue streams. What income is that asset going to generate, especially in a market where the services continually change? Peter mentioned the FCAS revenue will decrease as more batteries come online, but at the same time, new services will be introduced, and the technology has got to keep up with that. And when those services are introduced, your trading platform should be able to cope. Taking all these factors into consideration, it helps define the capacity, the location, the types of services that the battery storage system will deliver. When evaluating the technology and performance, developers should consult engineers, not the vendor. I give that piece of advice. Don't believe the data sheets. As Peter mentioned, and I've come across this as well, where certain batteries and PCSs claim to operate in the very fast FCAS markets, but when you use it, they don't fully comply, or they don't fully participate in the market. So consult the engineers and look at those response time of the inverters. And engineers will look at several critical factors to ensure that the system meets performance, reliability and economic requirements. And these factors include battery performance in the specifications, the scalability and flexibility. Is your system scalable, and can you grow with it in future if you need to? The response time of inverters for full participation in the FCAS markets. With a majority of the FCAS market moving into very fast FCAS, there's little left if your inverter can't participate in the 1-second markets. The technology maturity and wide market adoption. Are you beta testing a new technology on your side, or are you using something that's been proven not only here in Australia but across the globe? Interoperability, integration with third-party platforms, and the vendor responsiveness, the service, the warranty, expertise and their bankability. Are they going to be around the next 5 years or 10 years to service those products? What I will say is the choice of the platform is a contentious issue due to the rapid evolution of technology, the emergence and disappearance of manufacturers, and the rapid decrease in market pricing. Careful consideration of the hardware is critical when one adopts a long-term view. The final consideration is really around forecasting and the revenue generation potential of your asset. And what I will say is, while a forecast helps build the business case, Peter's already mentioned there is wide variance between different vendors that where you can buy forecast services. So a forecast comes with certain risks. These risks can stem from where is the data source coming from, how accurate is that data to start off with? How frequently are those data sets being updated and refreshed? So there's an inherent degree of uncertainty and risk. And the model, and the key question you should be asking the modeler, or when you're modeling financial returns, is what is the source of the data? How often is the data set updated? With FCAS markets changing so quickly, are you using data that's 3 months old, or is it current data, or using data that's a year old? And one important consideration to ask is, what is the low, medium, and high estimates of financial performance? The variation between the low and the high could be as much as 3x. So a median is usually the benchmark for financial performance. What assumptions are you making modeling the returns? Are you assuming that the battery is available 100% of the time to be in the FCAS market, or is it the FCAS market 85% of the time? That does impact on the final revenue number. Have you factored in the network charges in your modeling? And can you guarantee a floor price? After all of that, can you still guarantee a floor price on performance? The important thing here is, once the battery is built, commissioned, and operational, the focus quickly shifts and moves away from a forecast to a strategy of how do you optimize your trading strategy in real time and within a constant changing marketplace. In other words, make the best of what you have. This leads to the choice of the software platform. So GridBeyond provides software solutions, and we're fundamentally a software company that addresses three key concerns: mitigate risk, help build a business case, and ensure operational excellence. Our software solutions are available in 4 different streams. Designer is a battery design software where we optimize the battery storage system for performance, capacity, and financial returns. So we choose the best megawatts and megawatt hours for a particular location, for a particular revenue stack. Forecaster provides real-time forecast data and is designed for third-party trading platforms where you want to do the trade, but you need forecast data coming in from another source. Optimizer is similar to Forecaster, other than it also makes recommendations of what you should be trading to maximize revenue. And then as a service, GridBeyond would do the total solution, what we call managed battery as a service, where we design the system, we forecast, we execute the trades, we settle, and you become we basically provide a revenue to the operator. In terms of the designer software, and it's quite simply, the design application helps address the customer's pain point. What is the optimum battery storage system to maximize my return on investment and achieve the desired outcome? Design is a comprehensive tool for battery storage design, market simulation, and performance analysis. It enables the user to model, optimize the battery storage system by simulating different market conditions and performance scenarios. So there's a lot of inputs into this model, such as the battery characteristics, historical and forecast electricity prices and market demand patterns, the usage patterns, how you're going to charge and discharge the battery, site-specific data such as location. Has that location have enough capacity in the wires to support the import and exports required for the battery? And then financial considerations such as CapEx, OpEx, as well as debt financing. So the designer software allows you to design this battery storage system. You've optimized it. You have a degree of certainty of what this is going to generate. But how do you then execute trades on the grid? And for that, we have the Forecaster application. The Forecaster app tackles the big question: how do I get accurate data into my trading desk? A lot of operators want to do their trades themselves. They want to be in control, but they don't want to maintain their own data science team. So companies like ours will provide the Forecast application, a simple API that goes into your trading desk, and we provide that data in real time in 5 minutes, and we have a long-term forecast built into the model. We use historical data to predict what's happening next. And we continually pick up data from the NEM. I believe there's something like 27 points that we continually monitor. including real-time and historical market data, forecasting current weather conditions, information from energy grids and battery systems, past market conditions, and also additional data points and trading from other trading platforms and their APIs. So with Forecaster, operators of battery storage systems can save the cost of their in-house data science team, which is a very hard resource to hire in the first place, and instead work with experienced companies like GridBeyond while being in control of your trading strategies. While Forecaster delivers the raw data, the trader still needs to decide which market they wish to participate in and which will generate the greatest revenue. And this can be done with our optimizer application. So while Forecaster is a useful tool that provides real-time and historical data to predict energy market conditions, and it helps traders to anticipate trends and make informed decisions about the trade, the final decision, however, rests with the trader or their platform. Optimize, on the other hand, takes things the next step. While it still relies on real-time data from Forecasters, the forecasters is built into the model, it goes beyond by offering actionable recommendations for trading strategies. And the slide demonstrates that, and Peter mentioned it, besides FCAS and arbitrage, there are other services that the battery can participate in, and all those can be monitorized. So what the optimizer does is it has a short-term view, an immediate short-term view that might be 24 or 48 hours in advance, and it uses high-fidelity data to prepare the assets for the next day or the immediate trade. So if there's going to be an arbitrage event predicted in the next 24 hours, it gets the battery ready, it stores the energy, and it foregoes other services because it's decided, the algorithm's decided you're going to get more money from trading the next day than trading today. So the optimizer basically maximizes the resource before you. Another advantage of optimizer, it continuously adapts to real-time conditions. So every 5 minutes, the forecast is updated, and as the market changes, and it's a proactive tool to keep up with market trends and enhance financial performance. Just like Forecaster, Optimizer also features an API for easy integration with third-party platforms. We have a lot of companies that have their own trading desks, but we use Forecaster or Bid Optimizer as part of their solution. So the question then is, how does Optimizer work? How does it actually implement and know which service to trade in? And it's best represented by this heat map. And what this heat map demonstrates is each of those peaks represents 24 hours. So this service is repeatable, it's scheduled. And the red dots represent less frequent events, but higher performance and better trading opportunities. They're worth a lot more. Whereas the cool blue dots on the screen at the lower section, these trades can happen more frequently. There's lower returns, the dollar value is not worth as much, and there's higher risk of associated with those. So GridBeyond's optimizer platform, where do we sit? We typically recommend and operate around the 85 percentile. This means focusing our trading on our trading is opportunities and strategies focused on the top 15%, where the software identifies the highest potential for revenue and efficiency. By targeting high percentiles, we maximize returns and ensure optimum trading performance. The choice between targeting 85%, say, versus say 50% in trading recommendations depends on balancing how often you wish to trade against the potential revenue and risk. So at 85%, we find that 85% typically represents high performance and better trading opportunities. It's more reliable and reducing the likelihood of losses. And even though you're doing fewer trades, they're more strategic, impactful, and profitable. So the optimizer aims to strike a balance between trade volume performance to achieve the overall performance. how do we measure this? How do we know we've actually made the right trade? And this graph demonstrates our forecast performance against our actual performance for a real life case. So you see the tracking between what we forecast and what was achieved. There's a very strong correlation between it. So hindsight is indeed a valuable perspective. Initially, we discussed the need for a long-term forecast to validate business case, which ultimately influenced the project developer to proceed. The forecast was developed through modelling based on the best information we had at the time and inherently carried some risk. We minimised this risk by using quality data, making more realistic assumptions, and opted for proven and reliable technology. We engaged with experts, we managed our costs. However, the forecasts can still vary between different vendors, and the information that you use from the onset will influence the design. The real test comes once the battery is built and operational, and this is what this is demonstrating. The focus then shifts to how efficiently it trades and how well the recommended trades are tracked. Trading platforms can achieve results ranging from 60% correlation between actual and forecast up to 85%, which is considered an excellent result. Our trading platform in this example, this is from EROC in the Texas market, we achieved a correlation of 87%. So in hindsight, we achieved 85.7% of the potential revenue that was available to us. What I will say is not many platforms will achieve 100%, well, near on impossible. Some trading platforms, and we know this, are trading at 60%. The final solution is when you as a battery operator don't want to do your trading, you don't want to get involved, and you want to outsource this to an expert company. We provide what we call MBAS, Managed Battery as a Service, under a subscription plan, where we will take care of everything, including real-time monitoring, trade optimization, trade execution, financial settlement, and then you also benefit from our expertise and you eliminate the need for your own in-house resources. So thank you for attending the webinar, and I thank our guest speaker, Peter Newland, along with Solar Media, that organised this event. I appreciate your time and engagement, and if you have any questions or need further information, please feel free to reach out. I'll hand it back to Andy.
That's fantastic. Thank you so much, Stace, and thanks, Peter, for some great presentations. I think you guys really shed some light on a lot of the topics that I know will be at the forefront of the audience's minds. Chaps, if you'd like to just put your cameras back on briefly for the last couple of minutes, let's do a few quick questions. We've run a little bit over in terms of time, but I think it's only fair to give the audience a few extra thoughts and passing insights to go away with. So yeah, thanks for rejoining. So there's, I mean, lots of things that people, I'm sure, would like to know about. Like, so one thing to kick off with is, I think it's quite interesting to see around FCAS revenues. Now, Peter, I think in some ways, perhaps I slightly sold you a lemon by oversimplifying the issue in my introduction in saying that, so as of Q2 2024, FCAS revenues were about 40% of the stack versus Q2 2021, when they're about more than 80% of the stack. Now, I think the point is that that is quite seasonal. So it's not been a linear trend of going from 80% to 40%. I think, as you said, the picture is much more mixed than that, and averaging out, it's probably still more like 73% in the favor of FCAS. But yeah, I think there's a few sort of interested points from the audience around FCAS revenues and the changing revenue stack. Do you just want to give us a little bit more color on that? And then, Stace, maybe if you want to jump in on how platforms like GridBeyond can adapt nimbly to that. But yeah, Peter, from you first, I think.
Yeah, sure. That's a good question, Andy, because you're right, FCAS is indeed seasonal. I mean, obviously it's hard to predict outages and failures in the networks and transmission grids and generation assets. But over the last 2 years, if you were to download all of there's 4-second reads from a lot of different data points on the NEM, on the AEMO website. And certainly when you download all of those 4-second reads and you actually analyze them over the last couple of years, you will see that about 80% of the FCAS events actually occur in summer. December, January, February. Obviously that's when assets get harder, the demand gets larger, the demand swings are big. And there's more potential issues on some of the central generation just due to the heat and demand that's actually placed on them. So yes, indeed, it is seasonal. And there was an asset that we implemented last year in Adelaide, and you would go 1 week and you make $40,000, right, on trading as well as FCAS, right? Then you'll go the next 3 weeks and you'll make $4,000, $6,000, right? And then obviously an FCAS event pops up. So very hard. You can't obviously predict them, but so what we did was we actually had capacity available to actually perform that FCAS event should one come along, which meant we were always armed in the market. But not everyone will do that, and they have quite different strategies. But also AEMO actually says this is how much capacity we need available for FCAS in the market, and that changes year on year, season to season. And I'd expect that once you have a lot more larger batteries being connected to transmission, that the revenues for FCAS will decline because there'll be more competition, fighting for those same pieces of revenue. So that's going to be quite an interesting time coming up. But yeah, look, one of the other points I made was when you actually deal with someone trying to finance these projects, I've gone to 3 different parties in the market and I've come back with 3 wildly different answers on what the future might hold for me. No one's got a crystal ball, but the best thing about a battery is it's a flexible asset, unlike other generation. Stace, did you want to add something to that?
Yeah, first of all, concur that FCAS is seasonal. You're making your money over the Christmas vacation. So one of the considerations is if you can find those assets that don't get used over Christmas, like schools. But we know that the FCAS market is predicted to reduce in Australia as more batteries come online. And as Peter mentioned, in the UK, there's 16 services or 16 new services have been introduced. So how do we tackle it? Our software will, it's another input, it's another a service that we can provide, and our optimization platform will decide which of those services we wish to participate in. It may be FCAS is not as valuable to us in the future, but we could participate on the demand markets and generate more revenue. And again, our platforms mean that because we have one platform for the globe, which is then regionalized for the NEM and the WEM, and then we have a customer-specific layer of it, we can tailor the solutions to meet what the customer wishes to achieve or what market the customer wishes to participate in. And with battery assets, even in the same state, by the same operator, we would actually manage those batteries independently, and they would have their own algorithms. They'll trade their services for that particular location. So that's the expertise we bring to the table.
Great, thanks very much, Stace. And a question here from Glenn. Thanks very much for your question, Glenn. So Glenn is asking, do you have a feel for batteries now seeking more income from over-the-counter hedges? The ASX peak hedge is now rarely used, and ASX has sought market interest on 2 options for future peak hedges, but they are not yet offering either of these to the market. Any comments on hedges or the hedge market?
I've been involved with a couple of developers that are looking to roll out 30 megawatts of storage, again, distribution connected. And I know that they're currently in discussions with a couple of gentailers about a peak hedging contract for them to actually offset the risks to their generation. And I'm also aware that there's a couple of businesses that are implementing C&I storage that are actually on market. A portion of their demand is actually on market, so price varies every 5 minutes. So indeed, they're looking at storage to offset that hedging, but I'm not sure whether that quite answers your question though, Glenn.
Okie dokie. I mean, I think one thing, sorry, just going back a little bit to the question, rolling back to the question on FCAS a little bit, I think one thing that gets people certainly outside of Australia excited about the Australian market, and I wonder if it's the same within, is that I think there's a lot more transparency around sort of grid services opportunities and market data. That I think is relatively early in doing so, and I think that's obviously something that's helping drive the market. But I mean, I'm just thinking about, Stace, you've got the whole range of customers that you might have to that. So you'll have some that maybe themselves aren't interested in that transparency. They want you to care about that. So you have your managed batteries as a service contracts, let's say, things like that. On the other hand, you'll have others that will want to do the actual trading themselves kind of in-house. And that's pretty exciting in itself, I think. So how do you kind of educate customers on a day-to-day basis, between some of those that kind of want the hand-holding or even just to basically give you kind of the keys to it, versus the other way around? And I think if we could tie that into a great question from Anna in the audience, thank you very much for your question. What contracts do you see evolving and adding more value to battery developers? So, Stacey, I don't know if you want to start off from that sort of, optimization technology provider kind of platform perspective, and then Peter, if you would like to jump in. That'd be great.
Our forecast and optimization platform is really targeting at the big end of town utility scale batteries, where it might be 100 megawatts or 200 megawatts, where and we've done this with a number of big companies that operate in Australia, but in overseas projects where we provide the forecast and the optimization, and they just API, or there's an API to their trading platform. For smaller behind the meter projects, it probably pays for us to do everything. We do the trading, we do the MBAS service. The smaller developers really want to build their system and extract value from it. They're not long-term operators in terms of providing the grid services. A couple other points is, what other services can we bundle for behind the meter applications, where it might be connected to a large flex load like a data center or a building with a large solar system. We can actually enroll that into our trading as well. So if you had a cold storage or a data center or a steel mill where a battery goes in, we can prove the economics of the business case by enrolling the flex load and have that participate in demand services as well. Improve the performance of the existing solar systems by charging the battery solar and flattening out the solar curve. So the economics improves, not just the battery itself adds value, but then we can improve the economics of the whole site by enrolling the flex load under our plan. And that's where customers really want our expertise to the pitch. It's something that they can't do themselves.
Oh, just one more thing to add to that is certainly on the commercial customer side, I think there's a number of customers seeing decreasing revenues from their solar that they put in on their roofs, and indeed they're uncertain about the higher demands that are coming to their business, whether it be through, as an example I used before, customer or employee EV charging. So last year we did some work with a business where their model was, I'm going to provide a complete holistic solution to that business, which is all the technology, and they essentially provided it for free to the customer, right? But they actually got to trade the battery asset around what the customer was doing, and to actually make that revenue on the market. So, that was quite an innovative proposal, and it took the risk away from the customer to the vendor. But it was certainly a vendor that was looking to actually grow the slice of the pie. But I think the first part of the question that you mentioned was, how do you hand over control to someone, Andy? And that, to me, that's all about being transparent on performance, and does the person doing the trading have skin in the game with you? Have they delivered on what they said? And up front, can you talk to some other of their customers that have already been doing work with them, right? Because that helps build a level of trust. Have they performed well for that customer? Can they do the same for me? is it repeatable? Do I have scale? Do I have depth? Do I have key person risk in my organisation? All those things that, which you typically ask is certainly something that's very relevant in this space.
Yeah, no, definitely. And sorry, just to pick up on one thing you mentioned there, Peter, I think it's quite, and Stace as well, actually. So I think the participation of distributed assets, I think, is a really interesting one. And, we've seen that commercial and industrial has been a relatively slow moving segment of the market, typically in, let's say, in other leading markets such as the UK and the US. But interesting to see that there's kind of quite strong fundamental drivers within US, and also what you mentioned on distributed storage. So I saw with the community battery program you mentioned, I think Osgrid has just partnered with, I want to say Origin Energy and Energy Australia, I think, to offer a new rebate program for subscribers that allow their community battery portion to participate in in helping balance the grid. So some really interesting examples there, I think, in terms of distributed scale as well, and I suppose just speaks to the need for being able to coordinate all of these assets in a in a really elegant sort of way.
Just on that point, Andy, though, is when they're distribution connected assets, there's when you put in storage at a distribution level, you're actually solving a lot of grid issues, capacity constraints, and voltage issues, voltage disturbances. And eventually, I'd like to think that there would be value streams in the market to actually capture that for that asset, because it means the utility doesn't have to build assets, put it on their RAB, which actually gets included on everybody's bill at the end of the day. So I'd like to see some of that moving forward, but also not all connections across every DNSP are the same. They're all quite different. So for instance, there was a project in Adelaide where we have 2 connections to the site, one for the customer, one for the battery. We share revenue with the customer behind the scenes, not electrically, but we share revenue. And indeed, you can do that in some jurisdictions. In other jurisdictions, you can't. They do not like 2 connections beside each other. Some will do it 2 meters apart. Some will do it 100 meters apart. In Adelaide, we actually had to install extra equipment to handle all of the voltage swings and disturbances that were on that grid. So that all worked out really well. But yeah, each distribution business is quite different in that space, and it'd be nice to see some more consistency.
Yeah, definitely. I mean, we often hear, I think on your first point, we often hear about the immense value to the grid and I guess socially as well from things like virtual power plants. But a lot of the programs to, well, not just to monetize them, but to actually really put them in place, kind of don't really put the value, I guess, back to the consumer as you might hope, or back to the participant as you might hope. I think certainly that's a topic I could consider and talk about for hours on end. But I mean, I don't think we're running out of time on that. But yeah, go on. Yeah, please do.
I'll just give you one quick example of that. By when you look at the determinations that have been put in by the DNSPs recently, when you add up all of the curtailed energy that they're talking about from people's solar, they're talking about 2.2 terawatt hours in a year, right? Now, storage can help obviously solve that problem, and by storing all of that energy and actually deferring it into the evening peaks. But that's a lot of energy that could be used. And in fact, if you could capture it for the full 24-hour period, that's 410,000 homes that could be driven by local clean energy, which currently can't be done in the market.
Yeah, thanks very much, Peter. Okay, final audience question, and then I think we're going to have to wrap up for today. So yeah, once again, thanks a lot, everyone, for your time. So Naeem is asking, would it be correct to say that along with other parameters, modeling returns should be done more around arbitrage than FCAS? And I think, yeah, if you want to finish up, Peter, if you want to just take that on from the sort of, I guess, from the big picture level, and Stacey, if you'd like to conclude with how platforms can kind of facilitate that, that would be a great way to finish with, I think.
So at a higher level, I mean, you're trying to invest in an asset that's probably got a 20-year asset life, right? So it's very hard to look forward out that far. But even when you look forward out 5 years, you certainly can see the potential for FCAS revenues to decline. But as Andy indicated before, they're certainly still high today, and that's a value stream that's very valuable for you today. And indeed, you know, I think it was 40%, Andy, you were saying before, can provide that value to an asset. So it'd be, you know, it's a lot of value to not put on the table, even if it was only for the next 5 or 8 years. And it's a lot of money you'd therefore have to recover more in arbitrage, which is, you know, for smaller batteries harder, larger batteries not so hard, right? So I'll hand over to Stace now.
Yeah, look, I agree. I mean, when we do our modelling, we model both FCAS and arbitrage, and the weighting year on year changes. We predict that FCAS will go down based on the data that we're getting from AEMO and based on the historic data. The AEMO data is basically influenced by how fast new batteries come on stream. If there's any delay in new batteries coming on stream, the FCAS revenue continues at a higher rate. The other thing that the modelling doesn't always predict accurately is those events, those super events that will generate a lot of income in a very short time frame. Peter mentioned that the battery project he worked in Adelaide 1 week generated $40,000, I think it was, and then, you know, over the next few weeks it was 4,000. So, you know, we could pray that one day a transmission tower goes down the interconnector between Victoria and South Australia, and suddenly all the batteries are making a lot of money. I think last week it was on the NEM that the big battery in Victoria became a price maker for the NEM right across Australia. So there were spikes in New South Wales, Queensland, Tassie, and South Australia, and the price maker was the battery out of Victoria. So we model both, but there's all these other events that can actually make the revenue very attractive for very short periods of time when these super events occur. And I think the events, correct me if I'm wrong, Peter, could be 3, 4, 5 a year in any 12-month period.
Yeah. They're not that frequent, the big major issues. But certainly in the summer period is where you make most of your revenues from FCAS outside of those major events.
Excellent, you know, and yeah, we've got other ways of kind of monetizing, preventing those as well. I suppose you've got like the Waratah Super Battery, which is kind of under a long-term system integrity protection scheme contract. So there's all sorts of interesting ways that these are being contracted. And I guess, as you could probably tell in the audience, I feel like we could keep talking about this for hours, but I think we're probably going to have to call time on it for today as it is. So just remains from myself, everyone at Solar Media and Energy Storage News to say thank you so much to our speakers, Stace Samzidis and Peter Newland. Thank you so much for joining us and bringing your insights today, guys. And above all, thank you so much to you, the audience, for joining. As mentioned, you will be able to watch this again on demand. Slides will be sent out, and any questions that we didn't get to deal with, GridBeyond will be more than happy to tackle offline and continue that conversation. So yeah, that's all from us today. Thank you very much, everyone.